Hi everyone, once again this is Alfred from Amassers.com. I'm back to just talk about some Bitcoin news and what's happening in crypto, and to do a little technical analysis while there's a little action to the downside, and spot some of the things that I kind of anchor on when I'm deciding whether or not I'm a seller or I'm a buyer. And when I'm a seller, I'm only selling. I might, begin the process of removing maybe 10 or 12% of my total position, and I might freeze it and wait for a pullback. And right now, this would be a place where I start building some of that position back. In other words, just recycling, taking that same capital and beginning to buy back at these discounted levels. But let's look at when things are starting to build up. And just for me personally, not financial advice, but this is my thought process and when I'm looking to start building a position and what I believe is going on. So I want to start over here in what younger people are calling the legacy markets, like or legacy investments. There's something called the advancers versus decliners. In my mind, I'm just recreating the A to D by just coming over here. I'm using nomics now, and I'm looking at the top 100 coins, and I'm trying to see, am I seeing mostly green on the screen, or am I seeing mostly red? When we're getting to an interesting place to start participating as a buyer, you're going to see predominantly red. You want to buy when you see all this red, when you see all this blood on the streets. Now, how can you do that? Because it's so counterintuitive. And this is something that, trading on and off for 20 years. And if you can get this in your head, it's going to help you tremendously. If you're participating at a level that's psychologically uncomfortable for you, you're trying to get that one shot, or you're trying to get that huge trade where you're not going to have to trade anymore, or you're trying to compensate for some lost or missed trades. All of these things are ingredients to bring so much emotion and psychology into your game that it's going to make it super challenging for you to be profitable. And not because you don't know what you're doing, it's going to be challenging for you to be profitable just strictly because you've put yourself at an emotional disadvantage. But for the most part, if we were to count these up, it's surely way more on decliners versus advancers. I like to buy when there's a lot of blood on the streets and the A to D is tilted dramatically in the favor of the decliners. That's one of the phenomenons that's going to happen. Here you see we're pushing down all this black area here is the average swing of the week. As I'm recording this, it's Wednesday. So this is the average swing that should be here all the way to Thursday. It's not dramatic. If it were somewhere around here, like halfway to the biggest swing down that we've seen in several months, then that'd be dramatic. Then that's prime action to buy for me. Again, not financial advice, but it is buying low. The lower you can buy, the better you're going to have a chance to get out first profitably. And we're going to see these patterns as the guys at the exchanges try to liquidate positions. There it is last month. They tried to liquidate around the end. Everybody's bullish. Up, 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 up. Who do you think? Where do you think guys are going? They're all betting the market up. And then at the end of the month, they're going to liquidate, or because you're trading with leverage on a lot of those exchanges, it's going to be easier for them to liquidate you. I'm not trading with leverage. I'm just participating by purchasing, buying, and selling Bitcoin for spot. So in order for me to be, hey Google, stop. In order for me to be completely liquidated, Bitcoin has to go to zero. That doesn't mean I have to stick around until it happens. This is another month. You see that same pattern. You see we're falling down, starting to liquidate around the end of the month. This month, nothing was happening at the first of the month, so there's probably not a lot of positions saying, yeah, we're all gonna go long. But is nothing was happening, all of a sudden we break out and we start peeling up. That means that if more positions were low, then the guys that are seeking to liquidate guys and just take your money, they're going to peel you out of the market. The higher they can get it when you think it's going low, the more people with these positions that have so much leverage that all it takes is $1,000 in one direction, or 500 in one direction because they're 100 to 1 or whatever on some offshore exchange. They're just going to get liquidated, and they're going to, get their position moved back to zero. There's that big day. Why? All of a sudden, one day, and boom, in one day we liquidate at such a level that that's bigger than the last 1, 2, 3, 4, 5, 6, 7 days prior. That would be a week and a half, because this chart that I'm looking at omits it omits the weekends. So I always try and take a look at the bigger picture on the daily, and I can see we're in a down cycle. So I've been pinching all while this is happening. As the days progress, I've been pinching and building a little more on my position. I pinched some today at about 52,341, and if we go lower, then I'll take some more. Why didn't I just do it all at once? Because this is an hourly chart and this is daily, and you see we're only at a half deviation. When we're here at least one deviation, that's a place that's more interesting to me, and it's just going to be interesting for that day. I'm not trying to be super trader, and I'm trying to make it easy on myself by building my position over time. Also, I know that here's my fear indicator, which all of this is just based on 5 days, but I like to use these charts as well on MT4. We're only on like level 2 fear. We could be on level 4 or level 5. So this is not just like, wow, this is a killer place for me to load up and stock up a lot. So I want to pinch as we're going down, and I want to stock up when we get to what I believe personally to be that killer place. And another thing that I like to look at just quickly, I like to see what's going on over here. This is a gold chart, and each of these candles is a weekly. So the money's got to come from somewhere if guys are moving out of Bitcoin. Out into Bitcoin from outside other markets. So the other markets, like some of the indices, maybe they're going to be falling, but I like to watch gold, because when money is coming out of a real legacy safe haven like gold and moving into a new kind of store of value like Bitcoin, to me, that's a big indicator. And we saw that it was happening really strong like 3 weeks ago. These are coming down. That means guys are selling out of gold. And where's that money going to go? And it's probably Bitcoin, because the money wants to go somewhere, and it wants to chase yield. And you can see on these These are days. So this is when all of that money was going out of gold, and see how it started pushing up and into Bitcoin. That's not really so much technical stuff. That's kind of more like looking at some of the fundamental signs too. And the reason that I look at some of the fundamentals is because, and I love doing this, I do it all the time. I follow a lot of people on, well, yeah, I follow a lot of people on YouTube. I follow a few people on Twitter, and that's great. But sometimes those guys are going to create FUD. And my attempt when I'm sharing my little TA is to kind of talk about some of the fundamental reasons why I'm here and why I view crypto as being so positive. And all of that isn't just numbers on a chart. I'm okay with technical analysis. I love technical analysis, but everything is going to get better when you are adding fundamental analysis in with your technical analysis, and you have all of these things on your side. The advancers versus decliners, the big picture stuff, bigger charts. Notice I've got some weekly charts I shared today, some daily charts with weekly swing data that I've been sharing. And I got that little hourly chart, but that's just going to help me to find my entries as I'm buying on the day or as I'm selling on the day. I want to buy when we are at a place that is, from a probability standpoint, not very likely. We shouldn't have got there, but we did, and that's when I want to buy. Hey, honey, come away from there. New dog, and she's putting everything in her mouth. So, getting down here into the low levels of probability. Way down here, like -4, even that would be 46. That'd be like a 46% chance. And everybody is going to be shouting to the heavens that this is doom. All over YouTube. Like I told you guys, I just got in at 52,341. That was hours ago. We were above that for a good while. Now we're getting another little pop, a push down. Now, this is why I didn't, as the young people say now, I didn't use my whole bag on that initial purchase. I'm going to come back and purchase some more. Excuse me, if we can get deeper down into this area. I want to purchase when there's as much fear as I can find, and my indicator here doesn't tell me we're at some like amazing doomsday levels, and my deviations, one deviation, we got a 78% probability of getting at a -1 deviation, and we're not even there yet. -1 deviation will be slightly more than the average swing that we see down for like the last month and a half. So we're not even there. So just from statistical data, I'm waiting. I'm waiting till I can get more at an even better wholesale price. And that means that I'm going to be able to leave earlier with my profits before some people who maybe bought, well, I see a little pullback here. I seen 2 red candles. I'm ready to buy. Okay. I wasn't even considering buying there. So that's part of it. Even if you're going to trade with leverage, and try and get quick poppy trades, you're going to have to do that. You're going to have to be even more stingy and do that and build even more patience so that you get those snap reactions like that. And you can kind of see, I don't really like covering this like if you're trying to do the poppy trades, but you see how that rate of change there, see how everything is moving so fast. That is another sign that on a very intermittent basis, you may be approaching a level that you're going to get a little pop off of. But the day is down, you know. Look, here's my red. There's my red moving average. There's my blue. So the predominant trend right now is down. And you can see they just started crossing. Now there's somebody cooking up videos about doomsday on YouTube. But when you put all of that aside and you just look at things from a technical and a fundamental perspective, you can kind of keep your mindset stronger. And you see how we were just at 52,000 zero, and see how we're getting that bounce now at 52,002, 52,003. See, that's $300 in what? Just right in front of you. Those are things, just little nuances that you notice when you've been doing real poppy like trading, closer to HFT, but I wouldn't call it HFT. It's just, usually if I'm trading some stuff, sometimes I'm in and out really quick. And I'm trying to share the idea of why that's the case. A lot of times I'm just patiently waiting for those numbers, for that statistical advantage, for that data. And that's why I share my deviation levels every day at Trader Alfred. That's on Twitter. And you can usually find me posting them, the deviation levels that we get based on the numbers from investing.com. I share them every day in the Reddit, on the subreddit called Bitcoin Trading. And so, that's a lot of my technical data. I'll share the fearmonger numbers, which is like our little custom VIX for Bitcoin, our custom volatility index. I'll share that, and I'll give comments on what I think these numbers mean, and I'll do that usually if I have time on the subreddit or Bitcoin trading. So that's it. I wanted to make a shorter video, but I never can because I'm a bit verbose. I hope that you have gotten something out of this, and I hope I kind of gave a little glimpse into my thought process. It's mostly just about being patient, guys, and it's mostly just about keeping emotions out. And the easiest way to do that is don't go ham. Just take your time building into a position, and take your time slowly building your bag in crypto. It's already moving fast. There's already a lot of volatility. So sometimes, shit is so easy. Why go hard? And that's what I like about crypto. That's what's cool. Yeah, there's little pops you can get if you want to go out here and leverage up 10-to-1. I just showed you a little idea right there, okay? That $300 may have been $3,000, but look at how many hours in order to properly have gotten in. See, you had to have gotten out right here. You have to be fast enough to think and get out. And look at how many hours you'd have had to been patient enough to wait for that little poppy opportunity. I still trade binaries. I'm not knocking it. I'm just saying that this is a very different beast, and I think this crypto right now, in my opinion, is the low-hanging fruit. That's all I had, guys, and I hope it's giving you some ideas that will be useful to help you in your trading game, and as you're building your position as an investor over here in Bitcoin and on the crypto markets. Once again, this is Alfred for Amassers.com. Like, share, follow, subscribe. See you guys on the next video.